Hello and welcome to the August edition of Pork Talk. British pig prices have continued to move upwards in recent weeks, although this momentum does seem to be slowing. This is despite continuing strong demand for shipments to China, which has increased by 75% year on year in May. Chinese pig prices have also been rising strongly in recent weeks, increasing by 14% since the start of June. If this market is still strengthening, what is influencing the slowdown in GB price growth? Well, we know that the spot market influences changes in the SPP, and in over the past few weeks, spot prices have been falling. If this continues, it may signal a downturn in the SPP could be imminent. This downward pressure stems from developments on the continent, as well as poor domestic demand here. Let's take a look at these factors much more closely. Overall, pig meat retail sales were 3% lower than last year in the 12 weeks ending 16th of June. This is despite the fact that prices were also lower. Bacon sales have been particularly hit, with concerns that negative health messages are having a negative impact on demand. The fact that retailers are still selling pork at lower prices might suggest it is difficult to get these retailers to accept price rises when purchasing pork. Meanwhile, in Europe, prices in Northern Europe have generally declined in recent weeks. This is perhaps not surprising, considering market reports have been recording difficulties on the meat market for a number of weeks. However, the turn was ultimately spurred when Germany was blocked from exporting to the Philippines, as some shipments were found to be mixed with Polish meat. Germany had sent 28,000 tonnes of pig meat there in the year to May. This is its third largest export market outside the EU. In the already saturated Northern European market, this additional product weighs heavily on prices until the market can adjust. On the global stage, the situation is much more complicated by the fact that Canadian pork is also looking for an alternative market after losing the ability to export to China in June due to alleged ractopamine contamination. Canada had sent a substantial 186,000 tonnes there in the year to May, so whilst there remains good and growing opportunities for those who can actually access this market, it seems there are signs of oversupply elsewhere. Many analysts are anticipating a further uplift in Chinese demand in the second half of this year, which would be price supportive. However, demand from the other sectors will still be important and could provide a ceiling to prices. This is especially true considering that not all pork is actually able to reach this Chinese market. For more up-to-date information about pork market trends, please visit the prices and stats section of the AHTV Pork website.